Good morning, traders. Welcome to this morning update on Tuesday, the 24th of May. I'm Tom Colley, and I'll be looking at the markets with you this morning. We had a very quiet day yesterday. There's a couple of things that I'll show you in a moment where we are looking at potential positions on the one trade we took yesterday. Before we do that, just a quick reminder, week on Friday, 3rd of June, we'll be at the London Forex Expo at the Grange Tower Bridge Hotel. Please come along, have a chat with us. Mark Owen and Nishal Patel will be speaking at the event and will also be available on the stand to talk to you afterwards. Okay, over to the news. Again, quiet week. The one thing we had overnight, after no news or no significant news whatsoever yesterday, was RBA Governor Stevens speaking. Now, Stevens is really at the end of his reign as the governor. In September, he was replaced by a new incoming governor called Philip Lowe. So we're in a sort of transition period there. The only thing he really said of any significance last night was that the 2 to 3% inflation target that they have been using offers adequate flexibility to look at the bigger picture. So that really was a statement that of status quo. They weren't willing to reduce that target. They still saw it as being a valid target. Going forward today, we've got economic sentiment from the Germans at 10 a.m. and an inflation report hearings on the pound. Then late on this evening, trade balance on the Kiwi. So over to the markets. As I said, there's not been a great deal happening. This is the Shanghai Composite. We saw a bearish day yesterday following the bullish day the day before. But again, very much within what's been the range of the last week or 10 days. Same true in terms of the last week or 10 days, the range that the Nikkei's been in. The Nikkei's within this consolidation triangle here. So we are looking for something to happen within the next 2 to 3 weeks to break one way or the other, being the sort of extreme limit of that triangle. Over on the dollar, again, very little happening. We had a doji day. We've broken above 95, retested the top of this channel here. And this is one of our biases, or the main bias we've got this week. We've got a longer term bias on dollar strength. We also have a shorter term bias on pound strength, that based on seasonality, and also the Brexit vote that came out last week and gave that some momentum. But with Brexit due almost exactly a month from today, we are very cautious in anything other than the short term on that, because we see a lot of volatility in all pound-based markets. Over on the Aussie, well, this was a reaction to Governor Stevens' speech. If you look that on the hourly, you'll see at the 4 o'clock bar, which is when you spoke at 4:05, that's what drove that move down. We're short this market. We've been short a while from this level here. We've had profits off the table. Our stops are at break even. We'll look for a close below this level here, a retest of resistance at this level here to trade short, and with potential targets around the January low there. That was also move was also reflected on the New Zealand dollar. We can see a significant level through here. Again, we're looking for a break and retest of that. We had an order, or I had an order sat at this level where we can see a lot of the wicks there. Being a range trade, I would have been short there, looking to trade to the bottom of the range, but we now look like we're going to break out of the bottom of the range, so we'll be looking for a close below these lows, and then a retest tomorrow or later in the week to take this lower. More cautious on the size of the move on the New Zealand dollar than on the Aussie dollar. Over to the pound, in this instance the pound New Zealand cross pair. Yesterday we took a trade off this trend line here. It was an intraday trade on a 4-hour chart. We took the break of this high here. In all honesty, it was somewhat disappointment we didn't see any follow through yesterday, but the news from Australia, which is, as is often the case, New Zealand will follow. That follow through there has put us more than 2-1 up on that target. We've got money off the table, stops at break even, and we're looking for initial further targets around this high here, around the 217 level. Okay, that really is all there is to look at today. We're still very much looking at the charts we looked at yesterday. Dollar strength, pound strength, and weakness on Aussie, New Zealand and Swissy. What you're looking at here is our pure analysis system. If you like the look of the clean charts, you want to buy and sell with institutions, trend with a fundamental bias. We also build in our commitments of traders analysis, which are independent signals from another market. We use seasonal analysis, and that allows us to be very precise in picking our entries, which means we can use 40 pip stop losses on majors and minor FX pairs. Now, this means that we can improve your trading results by taking these trades where the probability is highest. With the small stops, we're more profitable with a smaller number of winners, so we don't need 80% winners in order to make money. We can actually make money whilst we're taking more losers than winners, because when we have the winners, they are big in comparison with the loss because of the size of our stops. If you've got any questions about this, I've already mentioned that we're going to be at the Forex exhibition a week on Friday, but you can either visit the Phoenix Blue website at www.phoenixblue.co.uk or email us direct to info@phoenixblue.co.uk. We have another event coming up in about a month's time, where there'll be a workshop free of charge where you can come and learn more about what we do. So please visit the website for that or anything else. So short and brief today after a quiet day yesterday. Thank you and have a good day's trading. Goodbye.